Yeah, good evening. It's Jim from JAGfx.com. It is Thursday, the 24th of October, 2024. Now, this is just a midweek video. Someone actually requested in the Telegram channel, I think it was in my hedging group, wanted to see a video on dollar cost averaging, or DCA. Apparently, I've never done one, even though I've discussed it in previous books. All right, we'll get into it and have a look. All right, so I hope everyone's evening's going all right. I don't think there's much news tonight. It's nearly 9 p.m. local. I think most of the news is done for the night, so all good. Thursday night, let's have a look. I did this Word document up, all right? So let's just have a quick squiz at this. Probably move it across because my ugly head's probably in the way. All right, dollar cost averaging, DCA, or sometimes called averaging down. Now, this sort of comes from the mainly the stock trader days, and we'll get on the charts in a minute. I'll show you what it is exactly. So basically, you took a position and it went against you, then you add it to that position as price dropped. So it's averaging down, and it's always been sort of referred to initially in the stock markets. As we all know, stock markets tend to have a bullish bias, which means they tend to go up. You've got investors, it's a single company, got shareholders, investors, the company wants to make profits, obviously, so they've got a bias to the upside. Whereas trading Forex, we're talking about pairs. So, for example, the Euro USD is the Euro dollar, or Euro, against the US dollar. So both of those countries are sort of fighting each other to find the right balance between their central banks, their governments, considering their imports, exports, all that sort of stuff. So Forex goes up and down. So that's a one thing you must be aware of. All right. Now, DCA, or dollar cost average, super high risk. I cannot stress this enough. This is not for everyone. Don't do it if you're not comfortable. Super high risk. I'm not telling you to do it. I'm just giving you trading ideas or trade management ideas. So if you're going to do this, seriously consider position sizing. Now, there's different ways of approaching that, and I'll discuss it a bit more in the video, but you have to trade small. Unless you're very confident in your trade setup, or you've got plenty of money or deep pockets, just be careful. It is a high risk. There's no protection. And what I mean by no protection, if we're talking about hedging or any of the hedging strategies or the stuff like that, you've always got trades taken in the other direction to give you some protection, reducing your overall risk. You still might have plenty of trades on, but they're not all in one direction, so it gives you a bit more, few more options when it comes to trade management of your hedging. With this, you're only taking trades in one direction, but I will show you where you can take trades in different directions at times. All right, there's one trader that has a popular YouTube channel, and this come up in the Telegram channel also, and that's about this style of trade, and that's Nick Sean. That's his name, Nick Sean. Look, Nick's not everyone's cup of tea. His personality, he's an American dude. He's got a great beard. He's very dry. He has some weird things on his videos, and the big thing that concerns a lot of people is he's happy to show his guns. No offense to our American friends, but you have a real gun culture there. And look, I've shot thousands and thousands of rounds. Yeah, it was a part of my job. I don't necessarily like guns, but I enjoy shooting them. But Nick, he has his like AR-15s and his Glocks on his videos. I don't know why. He's just trying to have a different approach. Look, he's out there. It's not, as I said, he's not everyone's cup of tea. His personality can rub you the wrong way, but he does have some good ideas. He's been doing this for a long time. He's evolved. I think he's got a private Telegram group. It's been going for about 6 years, and he shows all his trades. He's very transparent. So even though he's a bit of a weird dude, or a strange dude, as we'd say, he's pretty solid when it comes to actual trading. But he will tell you with this dollar cost averaging, he will blow accounts at times. But what he does is he accumulates enough profit, takes his money out, so he's starting afresh. So, it's... All right, let's get into it. Let's find the charts. Now, I'll just use MT5 here because that's easy for me to flick through charts. As much as TradingView looks pretty, I'm a lot more comfortable on MT5, would you believe? So we'll just get into it. Now, there's things to consider with dollar cost averaging. We're talking about Forex pairs here, right? So it's predominantly a Forex channel, Forex trading channel. You want to have pairs that don't move that much. So before, like say with the multi-sequence hedging strategy, you want pairs that do move, have big moves, because you always want to get out of those trades eventually. Whereas with the dollar cost averaging, you want pairs that aren't so, don't have the big moves. So dollar cost averaging is not good on the yen pairs, and I'll show you an example of that in a minute. But here we are looking at the USD CAD daily chart. Now, I like the higher time frames. I don't really do this on lower time frames, but there's no reason you can't get on historical charts and have a look for yourself. It's not hard. The setup's pretty obvious, as you'll see in a minute. So I've just picked this random start point on the, and this is my multi-sequence trading setup. So it's just the MACD Platinum, the standard MACD Platinum with the default settings, 12, 26, 9, it's a zero lag MACD. QMP filter, the component, it's the 183, so it's nothing changes. And the only difference is instead of having the 3 moving averages like I have in the high probability setup, I've just got the 20 moving average, 20 simple moving average. So that's that yellow dotted line. So that's my setup. Now, to make it simple, dollar cost averaging, we're still looking for the same rules for entry, trade entry. So in this case, here's a buy down here. MACD Platinum's below the 0 level, take the buy. MACD Platinum goes through the 0 level, crosses the 20. There's no need to dollar cost average. We're in a winning trade. Close half, move the stop up, trail it up, do whatever. Perfect. No need to dollar cost average. Right, here's a sell trade. Now, with my system, I take the sell here, so it's on, open this candle here. It closes below the 20 moving average. I'm closing half and putting a stop in place. But just say we don't. We're not doing that. We're just going to concentrate on dollar cost averaging. Take the sell. MACD Platinum still above the 0 level, goes down, we get this buy. Now, if we're hedging, we take the buy. With dollar cost averaging, we do not take that buy. So we leave this sell open. There's no stop in place. Look, you can have a catastrophic stop if you want it, like a stop, a couple hundred pips, 300, 400 pips up here somewhere, right up, but I don't. So you take the sell, small position size. So for example, say it was 0.01, just using the absolute minimum position size here. You know, a lot depends on your account size, your leverage, what pair you're trading, how confident you are, etc. But we'll say we're taking this sell, so on the open of this candle here, 0.01. Price goes against me, you get this buy signal here, ignore that, remain in this sell trade, then another sell trade presents, take the sell. On the open of this candle, this one. Now, it's up to you how you choose to set up your position sizes. Me, I use the 1, 3, 5, 8, 13, 21, which is loosely based on the Fibonacci sequence. The traditional Fibonacci sequence would be 1, 1, 2, 3, 5, 8, 13. You can use that. You could use 1, 2, 3, 4, 5, 6, 7, 8. Use whatever you like, whatever you think works. For me, I know 1, 3, 5, 8, 13 works. So in this case, this one was 0.01. This second sell, I'll just make this a little bit bigger. We're in the right spot here. Where are we? Oh, geez, I've lost my place, didn't I? Yeah. All right, give me 2 seconds. I'll draw a vertical line. That way I won't lose it. There we go, over here. All right, so we take the sell here, 0.01, price goes against me. Take the second sell here, 0.03. I can guarantee you by the time it's down here somewhere, MACD Platinum through the 0 level, anywhere in here we're in profit. Now what you could do is you can close this trade and close 0.02 of that trade, put a stop up here and just trail the stop down. So that's one way of looking at it, all right? So that's the simple, so that's the sell there. So as soon as the MACD Platinum goes through the 0 level, we're in buy mode. So in this case, There's your first buy there. Goes against me, no stop in place, 0.01, no stop. Reverse signal, no trade taken, so we're still, if this goes to zero, we're losing everything, but it won't. It's a USD and a Canadian dollar. It might drop for 1,000 pips, but it won't go to zero. If it does, the whole world's in trouble. New buy here, MACD platinum still below the zero, take the buy, 0.03, so we'll 0.1 and 0.3 long, and it goes up, we come up, we're in a winner. MACD platinum above the zero level, sell signal, probably closed out in here, so we couldn't lose on that trade. Buy, and it's up to you whether you take it or not, because the MACD platinum's right on the zero level, so we'll ignore that. Sell, that's a winner, no need for dollar cost averaging. Buy, up, across, MACD platinum through the zero level, no problems. Right, now we're getting into this territory here. Now we've got 3 trades. Sell here, MACD platinum above the zero level, sell. Ignore the buy. Take a second sell, 0.05. It keeps on going up. Take a third sell, 0.05. Plug all the numbers into your spreadsheet, and off she goes. Now, spreadsheet, I just mean this little sucker. So in this case, oh, hang on a sec. So in this case, it'd be sell, sell, sell. So we'll change that to sell. So you just plug the numbers in, the entry levels here. Don't worry about these numbers here, I'm just playing around. It gives you, so we sell 1, sell 3, sell 5, and just say we put a number in here, 8, 7, 3, 4, 4, 4. I'm just trying to give you a number. I'm just making these up just to give you a position size. So we're basically 0.09 short. And this will give you a number over here, a break-even level, which will be, in this case, it'll be around here somewhere. So it doesn't have to go far. Price doesn't have to pull far back. We're going to sell here, sell there, third sell there, MACD platinum through the zero level, no problems. So it's pretty easy. And once you get, say your break even was down here on this bearish candle, MACD platinum through the zero level, close the original, maybe close the second sell trade, and close 0.4 of the last trade or something like that. All right, here we've got a buy, goes up, no need to hedge or no need to dollar cost average. Sell, goes down, buy, ignore, second sell, take, get out, break even. No worries, or even better. So we'll just continue on, I'll just show you the examples. Buy, ignore the sell, take the next buy, and up she goes. You just could trail this all the way up here. Here's one here, sell. Now this is where it gets a little bit ugly. Now if we're hedging, we'd take the hedge buy there, but we're not. So we're taking a sell here, so our first entry's down here. Next entry's up here. Now we're a long way between entries, so this is where people get nervous, drawdown starts to come in, mess with your mind, especially when price comes down. Probably not enough to get out at break even. MACD platinum still above the zero level. Price goes up even higher, so you're losing on both trades. You know, you might be tempted to draw a trend line across here and take another trade. Get in, you could probably get out at break even in there somewhere. If you didn't, you get this other buy here. Now, this is where I was talking about there's no protection, but you could end up in another sequence. Now, the MACD platinum's gone through the zero level. We're still in these 2 sell trades, but we're not out at break even yet. I don't think we'd be close, but we get this buy. You can then commence another completely independent sequence. So this would be a buy sequence. So we take the buy here. In the meantime, it's gone against me. Price drops down. Now, if you weren't already out of these 2 sell trades by now, anytime that hit break even, I would be out. It may be the case where another red dot appears, but that red dot won't appear until this candle's closed. So you're assuming prices come all the way down to here before you see that red dot, which may be enough to get you out of both of those previous sell trades. If not, take that sell trade as your third trade. It doesn't matter if it's in the wrong spot compared to the MACD. Take it anyway because it's a sell signal. Take it. And sure enough, you would have definitely got out of that previous one. But in the meantime, we're still stuck in this buy. And we get another signal here. Take the buy. And up she goes. Up she goes. Up here. I guarantee you'll be out of that. Nothing worse than break even. So you get the idea? Dollar cost average. And this is a nice, easy pair to trade. The USD CAD's a nice, easy pair. Probably ignore those ones. Take the buy there. Get out. Follow your normal trade management rules. MACD platinum through the zero level. Start looking for ways to reduce risk. Sell here. MACD platinum above the zero level. Sell. Ignore the buy. Take the next sell. Easily out. Buy. Winner. Sell. Winner. Buy. Winner. So they're all winning trades, but it's not all rainbows and unicorns. We'll find somewhere it's not. That's buy. It's a winner. Sell. You'd definitely be out of that. But let's say we didn't. Ignore the buy. Took the second sell up here. MACD platinum still above the zero level. Then took this third sell. I can guarantee you would have been out. Worst case scenario, break even. Buy. Couldn't lose on that. Here's another one. Sell. First sell. Second sell. Out. If you weren't out there, you commence another buy sequence. New buy sequence. So we'll commence. Keep an eye on that. So we're in two sells. Hang on. One sell from here. Another sell. If you didn't get out at break even, we take this buy, MACD platinum below the zero level. So we're looking at a completely independent trade. So there's another sell. Now, remember that red dot won't appear until this candle opens here. So I'm assuming we'd be out of these two trades before we got that red dot, but say we weren't, we could just take that anyway. And in the meantime, when there's buy, ignore that sell as a hedge, take this buy here, and it's gone down. Here's the third buy. See the MACD platinum's all below the zero, and up she goes. So you get the idea there. That's probably a couple of years worth of data there, and we haven't lost anything. All right, so that's all the way through the end. I can tell you now, buy there, and be out. No problems. Winner, sell, winner. Buy, definitely sell, definitely buy, definitely sell, definitely. You'd probably be out of this one in here somewhere. MACD platinum's at the zero level. If not, you'd be waiting on another sell, and that buy is not a valid one. So that's simple. That's your dollar cost averaging, all right? Now, let's have a look where it doesn't work. USD, Japanese yen. This pair will move a lot. Any of the yen pairs, they move one direction for a long time. Here's an example here. So we've got this sell. So look here. MACD platinum above the zero level. Goes into buy mode. Another sell. Goes nowhere. Goes up again. Another sell. Goes up. Nothing. Another sell. Doesn't come back. MACD platinum still above the zero. In the meantime, you're in all these trades. 1, 3, 5, 8. 13. Now you'd probably be out here somewhere, which coincides generally with the MACD platinum going through the zero level. So even though you probably took a loss in these first 3 sell trades, in here somewhere you got 5 times, you got 8 times, only 3 times this. But you can see how it gets you in strife. Now we'll just go on a bit further. No problems through this sort of stuff. That's easy. But when you go like this, here we go again. This is the yen. So we take the buys. Just look, you can hammer these buys. They're cool. But you get these sells here. That one would have worked out all right, but let's start here. Sell. Nah. You probably get out of here, break even, or something like it. It's just not worth the hassle. Sell. I mean, in the meantime, you can take these buys and just trail them up. No worries at all. So sell there, probably out, no problems, but you just don't need the grief. Sell there, take the buy, take the sell. Eventually they come down, but you're just going to be in trades a long time. So it's not worth the hassle. So you're better off going with the pairs that, let's have a look. Say, for example, a pair I detest, Euro Pound, daily chart. Let's have a look at this. You know, like this will work nicely. Right, we'll stay here, random plot in the middle of the chart. Sell there, Goes down, we're out. Buy, can't lose. Sell, can't lose. Right, buy, yeah, can't lose. Sell, I'm trying to find something weird. All right, here we go. We won't lose through that. Certainly won't lose through that. We'll just take buys. We can take sell, 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 sell. Definitely be out of those sells in there. If not there, definitely there. Buy, sell. I know I'm going through this quickly, but I could just look at these charts and I know. So there's a buy here. First buy, ignore the sell. Second buy. Remember, that's depending on your position size. I use 1-3, so that's no dramas. If I wasn't, I'd take this one here and I load it up. In the meantime, I would have taken that sell. So always accumulating profit. Couldn't lose. All right, let's have a look. I think I had a American, right, stock. What's this one? Apple. This is Apple. So it's American stock. I should take the thing off. This is the daily chart. Now with stocks, if I was trading stocks, as I said, they've got a positive bias. So if I was doing the dollar cost averaging, I would be only taking buy setups. Now what I mean by buy setups, ignoring all the sells basically. So just taking buys. So let's have a look. We'll go back in time here. That's a stock split, all right? So we just go before this. No, we'll go after the stock split. Want to see the MACD. All right, here we go. Now, this is it. So there's a buy, MACD platinum. We're only looking when the MACD platinum is below the zero level. Ignoring the sells. Even though the sells probably pay out all right, just why risk them? Just take the low-hanging fruit. So here's a buy here. It's gone up, eventually gone up, couldn't lose. Here's another buy here, gone up, can't lose. Right, let's get somewhere where it's going to be big. All right, here's a buy. So you might say buy 100 shares here, for example, and this buy. MACD platinum still below the zero. Another buy there. Buy. Well, it's up to you whether you actually buy more or not, because your 100 shares is already in profit. You might buy 300 shares there. MACD platinum goes through the zero level, start reducing the number of shares, or bring the stop right up. Buy there. MACD platinum goes through, can't lose. All right, let's go somewhere where... Buy there, we can't lose. MACD platinum goes through the zero. Right, here's one. Buy there, say buy 100 shares, drops down, sell signal. Buy 300 shares there. MACD platinum goes up through the zero level, can't lose. Here's a good example where you're getting a little bit of trouble. And you always want to try and stress test anytime you do a historical chart. So here's your buy signal. Take the buy, 100 shares, say for example, drops down. You're losing, you're losing, you're losing. Another buy signal, take 300 shares. You're still losing because it doesn't go up much higher. Drops down again. Drops MACD platinum below the zero level. Buy 500 shares. Bang, up she goes. Your dollar cost averaging down. That's where they get the term from. Goes up, start closing out some if you want. Recover your previous losses, reduce your risk, put a trailing stop in. Here's another one. Buy here. Buy more here. And you probably get out somewhere up here or start reducing your risk. Buy there. Second buy there. Get out, reduce your risk. So all you're doing is basically buying on retracements, but not just looking for any time there's a pullback. MACD platinum comes below the zero, take the buy. And you can just trail these stops up. You might have 100 shares from way back somewhere here and it's still going up. Anytime there's buy signals, just take them. Here's one here that gets a little bit tricky. So this is probably a good example. So here's your first buy signal up here. This video is about 25 minutes, so I want to just switch to metals in a minute. So we're first buys up there, get the sell, ignore it, drops down. You're probably getting a bit stressed. Your retirement funds, your kids' college fund or your retirement funds go. Buy more there, 300. You may get the break even. You probably would. You may be tempted to get out. If you didn't, you just want to hold on because you're very bullish bias. Another opportunity to buy in here. Now you can change your position size up, but you don't necessarily have to buy 100, 300, 500, but you could, 100, 200, 300, 400, up to you. So you buy more here. Again, you can plug all these numbers into that multi-trade worksheet. You go to decimals, 2 decimal points, and just do whatever you like there. So we're buying there. We'd definitely be at break even somewhere up here, but if you want to hold on again and take more trades here, eventually you get up, you're building a position size. So even though you're probably losing on your initial 100 shares up here, you're building, you're building, you're building. Let's see if we get a loser anywhere here. Buy, buy, buy. You would have been out there. If not, buy there. You would have been out. No problems. Let's go. Buy, buy. No worries. Buy, no problems. Not a valid signal. Don't lose. Don't lose anywhere. All right. I had silver. I think I had a 4-hour chart. So we'll have a look at a 4-hour chart in a minute. Actually, I might drop this down on a 4-hour chart. Yep. All right, silver, 4-hour chart. Random, well, let's pick a random spot here. All right. Dollar cost averaging. Buy there, up she goes. You could look at selling metals. They tend to work both ways, up to you. Sell, that might be a bit ugly. You might have to take a third sell over here, who cares? In the meantime, you'd be taking this buy here and winning there. Take that third sell there, buy there. You'd probably be out in here somewhere. If not, buy again there. And you could sell there if you wanted to. Make some profit in the meantime. You're still in this buy sequence. Third buy there, up she goes. Definitely a winner. This is a 4-hour chart. Sell. MACD platinum through the zero, didn't lose. Buy, didn't lose. Right, sell, above MACD platinum above zero level, ignore, sell, comes down. Here, definitely a winner. Buy, can't lose. Sell, can't lose. I'm just looking at MACD platinum through the zero level. Doesn't matter because you'll still make it up here if you didn't. Buy, you'd be reluctant to take that. You may sell, you'd ignore that. Sell, you take that. Can't lose. Buy, MACD platinum through the zero level, can't lose. Sell. You may not got out of here, doesn't matter. Sell there. You definitely be overall profitable somewhere there. If not, you may start looking at buying here. Sell. Price has gone down. You're definitely out of these previous sells, can't lose. If you're still in this buy here, take that one, that shoots up nicely, can't lose. Sell, can't lose. Buy, can't lose. Sell, can't lose. Buy, winner. Sell, that's probably a break-even trade. You probably, because it's got in down the low here, you could wait for price to spike down. Like I said, that red dot won't appear until this new candle opens. So if you're still in this sell, you're below the zero level, just get out to break even or better. Buy, can't lose. Sell. Now, and I've gone through a few charts and there hasn't been many losing sequences at all. But when you're trading on the right edge of the chart, when you see your drawdown going up, your swap fees going up, that's when the mental games will mess with you, mess with your mind. So it's not all good stuff. Trust me. I've been lucky and I've picked some random charts and I didn't do any pre-planning on this video. I'm just making sure I picked the right pairs and I showed you pairs that struggle a bit. That's the yen pairs. All right, let's have a look here. We've got to find one that doesn't work. Buy. And that goes up to there. So that would have covered everything. No worries. Sell, definitely no problems. Buy if you took it. Yeah, no worries. Sell, definitely, yeah. Buy here, buy there, definitely, no problems. Sell there. Sell, yeah, can't lose. Buy, can't lose. Sell, can't lose. I know I'm rushing through these quickly, but you can slow down the video and have a look. I'm just looking at the cursor, looking at the MACD Platinum. I'm not even looking at the 20 moving average, which is another trade management tool. Buy. Sell. MACD Platinum through the zero level, out of probably break even, worst case scenario. If not, take the buy, you'd make up, take the sell there and make up for it. Buy, can't lose. Sell, can't lose. Buy, I don't know if you take it, you can't lose. Sell, can't lose. Buy, you can't lose. Sell, sell, can't lose. Buy there. Buy, second buy. If you didn't get it there, you get it on the third one. Sell, 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 can't lose. We need a move. We need a big move to buy. Here we go. Here we go. This might be something we're looking for. Buy there. First buy. Second buy down here. Goes nowhere fast. In the meantime, take this sell. Bang, through here. Another buy here. Might not be enough. Remember, we still got this buy up here. Second buy up here. Third buy in here. Might not be enough. Another sell. So this sell would have been closed out. So we take another sell here. Get another buy. So this high is up here. Now, I guarantee you, we can get out of this buy, this buy, this buy, and that buy for a profit. Now, we've only got this sell, and we would be out down here somewhere, guaranteed. All right, this video has gone 31 minutes. You get the idea. Now, I've got to go back. Dollar cost averaging. Super high risk. No protection. When I say there's no protection, there's no hedge trades. You saw that. There's no stop losses ever until you start managing your trades. And you can manage your trades. There's nothing, if you're on a tear and you get what I call a dangler or a runner, just trail it up, you know. Get back to your base lot size. So if your base lot size is 0.01, get back to that ASAP and trade that. It might be 0.1. And you can check out Nick Sean's channel if you want. But that's it, boys and girls. Dollar cost averaging in a nutshell. Now, if you like the video, hit the like button and subscribe button. If you've got any questions, hit me up in the Telegram. I'll put a link to it. There's a hedging group in the Telegram. What do you call Telegram? Just Telegram. I don't know if you call it groups or channels. I always get confused. But I've got a dedicated hedging group that covers the loss recovery, hedging, and DCA, which I'm not doing too much DCA other than one of my loss recovery type methods. So there's different ways. There's lots of different ways of approaching the markets. I use the same entry criteria for all my trades. It's simple. You all know it, the QMP dot, MACD Platinum, 0 level. So that's my entry for everything. And it's just different ways of managing trades or trade management, as you call it. All right, thanks for watching. Enjoy your night. Stay safe. Weekend's coming up. You'll hear from me again on Saturday sometime with a hangover. All right, thanks, boys and girls. Cheers.